What is going on, traders? Welcome back to the Traveling Trader. A little different flavor today. We're going to be doing something educational, so it's not going to be a top stocks video or the best penny stock to buy video. But in this video, I'm going to be teaching beginners how to do technical analysis. And I'm going to be describing it in my own way from my perspective. And in my view, I feel like I can really simplify the mystery for you. And I guarantee you in the short video, which after watching it, you will be a better technical analyst than before you started watching it. And in this day and age of YouTube and Reddit influenced investing, I'm tired of seeing people buy in at the top or even blue chip stocks like Tesla. I'm tired of seeing people buy just because somebody told them to buy, but they have no reference for whether that is a good price or not. So I'll show you exactly how to get started with technical analysis, what indicators I think you should use as a beginner. And right after you're done with this video, you should not be executing another trade without at least looking at a chart first. But before I get into it, if you get anything out of this video, leave it a big fat thumbs up just like this. Leave it in the comment section below. Let me know it was helpful. This video is probably not going to get a ton of views, but even if it helps just one of you, that's all that matters to me. Aside from questions asking me how to trade options, this is one of the most asked questions that I get. How do I do technical analysis? Where do I start? So hopefully I can shed some light. Let's get right into it. All right, so what is technical analysis? Technical analysis is really just an investment and evaluation discipline using trend analysis based on trading activity such as price and volume. That's really it. Now, what you are going to need in order to do technical analysis, chances are if you're trading on Robinhood or Webull or something more sophisticated like Thinkorswim, it already comes with some element of charting. However, in my view, they are all limited in their own ways. Even Thinkorswim is a lot less robust than something like TradingView. So my go-to charting application is TradingView. You can get a free TradingView account. You don't have to get the paid account. Once you start getting more advanced, you can then think about getting a paid account, which enables more indicators. But initially, you can start off with a free account. You got to learn how to dribble before mastering the Allen Iverson crossover, just saying. And you might be thinking to yourself, well, I heard technical analysis doesn't work. Does it really work? This comes from a fundamental misunderstanding of what technical analysis is. You're not trying to tell the future. You're trying to find optimal entries based on price history. That's it. So to simplify technical analysis, all you're doing is using different tools to find support and resistance levels. That is it. What is a support level? A support level is where traders or investors, the bulk of traders and investors agree that there is a price floor, and that is where they're willing to support the stock or the asset at. And resistance is the exact opposite. It's just the price ceiling. This is where traders and investors agree for this time period that this is the highest price they're willing to pay for the stock. So everything you see me doing, whether it's the moving averages or Fibonacci or drawing patterns, all you're trying to do is find support and resistance using different methods. That is it. It's really that simple. So the question of whether it works, again, depends on what your understanding is. If you're expecting technical analysis to tell you the future to the T, no. Nothing will do that unless you have a freaking time machine. But if I'm looking at a chart, let's just pull up QuantumScape, for instance. If I'm looking at a chart through technical analysis, I can already tell you that there is no way on God's green earth that I'm going to buy QuantumScape here. There's just no way I'm going to do it. I'm going to wait for a retracement. A retracement means a temporary pullback where you are looking for support for potentially an area to re-enter or enter a first position in a stock that you want. There's no way I'm buying QuantumScape here. And unfortunately, a lot of people bought QuantumScape at $130. A lot of people bought Tesla at almost $900, right? Pick your favorite stock. What is a hot stock right now? A lot of people bought Fubo TV at $60. So technical analysis definitely works in that respect, but it doesn't answer the question, oh, tell me what price Fubo is going to be on Wednesday. Now, you can project long-term trends, right? Like you could say with a certain degree of confidence that in the next 2 to 3 years, Apple's going to gain 20% in their market cap. But that's very different from saying Fubo TV is going to be $37 on Thursday. So yes, it absolutely works. When you buy a car or a house, you're looking at an index of prices. When you buy a car or you're selling your car, you're looking at Kelley Blue Book. Why is that? Well, you are basing it off of previous price history, right? which is exactly what a chart is. That's all it is. This is every single transaction ever on the stock market for this one stock. So you know what people are buying and selling things at. For all of you that are sneakerheads, you know that the price of Jordans, for instance, fluctuate drastically. Same thing with the chart. You know if you're paying too much or not because you have every single transaction in front of you. So absolutely technical analysis works. But if you're looking for an answer, but if you're looking for a crystal ball, no. All right, so now that you know which charting platform you're going to use, what indicators should you add to it? A lot of times you'll see, you know, beginner technical analysts on YouTube who are flaunting themselves as gurus. They'll start drawing shit like they're Picasso, right? Trying to impress everybody with their lines and circles and shit. But come on, bro. You're not Picasso. So what should you start with? Well, obviously, the most important is the price action. You already have the price in front of you. These are called candles. The green candles mean that it was an up day. The red candles mean that it was a down day. When you see a green candle, that means that the price opened up at the bottom end of that candle, right? Like if we look at this candle here, it means the price opened up at the bottom of the candle right here, and it closed at the top of the candle right here. And vice versa for the red candles. When you see a red candle, it means that the candle or the day opened up here and it closed right here. That's all that means. Okay, got it. I'm stepping through this quickly because it's a condensed video. Down here, you have the volume. It just tells you for each day how many shares were traded. All right, what else do you need? The next thing that I feel like you need is a moving average. So I would start with the 21 exponential moving average. It is just the average price over a certain number of days. And the exponential moving average weights recent days heavier than previous days, but it's not important to know that. So in TradingView, you would go over here to the indicators, you would type in exponential, and you would see the first one says moving average exponential. If you're not using TradingView and you're using like Webull or something, it should be in there. This is a standard indicator. So you click on moving average exponential. Now in TradingView, you can come in here and you can actually make modifications to your moving average. So you can change the length. By default, it'll say something like 9 or 10. You could change it to 21, which is what I use. You can use a color that you like. For me, I always use white for the 21 EMA. And voila, there you have it. Now, why is the 21 EMA important? Well, usually on uptrends, it's been identified that the 21 EMA is one of the key moving averages, especially on uptrends, meaning that stocks on uptrends usually respect the 21 EMA. So if you see, this is Fubo TV, on its uptrend, if you were looking for a place to enter, you would pick the 21 EMA on the way up as a reference point, right? If you look at something even like Tesla loves the 21 EMA. So if you look at this uptrend and you were wondering when you should buy, no, you should not buy Tesla at $900. Stocks will always revert to the mean. So if you stuck to the 21 EMA as kind of a reference point, obviously it doesn't have to touch exactly, but when it gets around there, you can use this as your reference point because stocks on uptrends love the 21 EMA. Another stock is, if we look at it, is Laser, which we made a ton of money on just using this strategy. So the last time that we bought Laser, the last two times, there was a time here at the 21 EMA, and then there was a time here at the 21 EMA. Now, is it always going to stop there? No, sometimes it will fail. Like if we go back to Fubo, you'll see that sometimes it will fail, and I'll show you what to do in this case. But you essentially would set a stop limit below your moving average here, because if you're wrong, remember, we're not telling the future, we're just trying to get the most optimal price based on what traders are doing at this time. So if you're wrong, you could set a stop limit here and exit with minimal harm, as opposed to what beginners usually do is they buy at some random location having no idea what this reference is. And then the stock starts dropping and they're looking around for direction. They have no idea what they're doing. They don't know what this price means in the grand scheme of things. And they just bag hold this stuff, losing 40, 50, 60%. And then they convince themselves that it will be back up. Sometimes, not all the time. So you can even use the 21 EMA strategically to set your exit points, right? You'll put a stop limit, for instance, below the 21 EMA. So this candle right here, if you entered at the 21 EMA thinking that Fubo, and I did this too, and I exited my position for a small loss here. I entered Fubo TV at this 21 EMA, ended up breaking down, but my stop limit is right here. So I exited unscathed. So that is the 21 EMA. What else do I add? Well, I add more moving averages.
How much more do you want from me?
More.
If you see my videos, you usually see 4 moving averages on there. So I add the 50, the 100, and the 200 SMA, which is simple moving average. So just like I said, the exponential moving average weights recent price more than previous price. The simple moving average is just an average. So it takes the 50 moving average, for instance, it takes the price, adds it up over 50 days, divides it by 50. And that's how you get the simple moving average. Now, why is this important? Well, historically, it's shown that aside from the 21 EMA, another major moving average is the 50, 100, and 200 MAs. And I use these as buy points. For instance, Facebook, right? Just a powerhouse of a blue chip stock. Right now is at the 200 MA, which is green on my chart. So we ended up loading heavy here. Now, could we be wrong? Of course. But wouldn't you rather buy Facebook here at a discount versus here at the high or somewhere in the middle where you have no reference for what price that represents? And with long-term blue chip holdings, I usually don't set stop limits. I'm happy buying Facebook here. And if it drops, I will buy some more. But I recognize that this is a major discount and potentially a nice reversal level. We saw this with Zoom recently, right? This is going to seem like magic when I start stepping through this because you're going to be like, holy shit, I never knew that this actually existed. Look at Zoom. We swing traded the living crap out of Zoom this whole pandemic run up, right? It loved the 50 moving average, the orange line on my chart. And by the way, you're going to start recognizing these trends, right? Like some stocks adhere to certain moving averages. It's just the way it is. And you can't trade against the grain. You just have to accept it, recognize it, and make moves based on that analysis. So in this case, I see that Zoom bounces off the 50 MA 1, 2, 3, 4, 5 times off the 50 moving average, right? And you could have made a killing buying every single time off the 50 moving average. Or if you're a long-term holder, you could have waited and recognized that that was a good entry. Now, when Zoom hit the 100-day moving average here, I ended up buying it as well. And you could have taken profits if you had a profit target. But Zoom ends up breaking down and is now near the 200 moving average. Well, in our private trading group, we bought Zoom here because it was finding support here. Remember, I said technical analysis, all you're really trying to do is find support and resistance. Okay, so that's a really quick summary. 21 EMA, 50, 100, 200-day moving averages. And if you're looking for the simple moving averages in TradingView, you go to the indicators, you could type in simple, and here you see simple moving averages. And you can change the colors to what you want. I don't know why, but I always default to the Rasta colors. Must have been that trip in Jamaica. Okay, what else? We're going to talk about 2 more things really quickly. Oscillator indicators, right? These are momentum indicators. You might have heard about these to some degree. RSI, MACD, stochastic RSI. They look like this. Now, obviously, you can spend a whole video talking about these, so I'm not going to go through each one. But all I'm going to tell you is that these are momentum indicators, and what you're trying to find is confluence. So you're trying to find multiple things telling you the same thing at the same time. So when I see Facebook here at the 200-day moving average, and I look down at the RSI and I see that it is at the bottom band, and I look at the stochastic RSI and I see it's at the bottom band, that then gives me further confidence to buy Facebook here. So these momentum indicators, in really quick and basic terms, at the top part, the top band, if they're over the top band, it's considered overbought. Like you see here, usually means it's extended. So when I look at Facebook here and it's, for instance, back here and it's peaking, it coincides with being overbought on the stochastic RSI and the RSI itself. So that might give me an indication that, hey, look, it might be time to take profits or at least set a stop limit. So like I said, I'm not going to go through each momentum indicator. Just know that at the top here, above the upper band, it's considered overbought. Below the lower band is considered oversold. Now, there are more advanced ways that you can look at these indicators. I actually did a video on what's called divergence. I will post it here and in the description as well if you're interested in learning more about that. And the last thing I'll talk about is chart patterns. Again, you could do a video on each one of these. Now, there are sites like the one I'm looking at now where you can literally get a nice graphic summary of all of the chart patterns or most of the chart patterns available. Now, you're not going to learn these overnight. Just like shooting jump shots, charting takes reps. This is free. You have no excuse. Back when I started trading almost 2 decades ago, we didn't have anything like this. We were looking at those small, shitty Yahoo charts, but there was nothing robust and powerful like this. So use it to your advantage. Don't take it for granted. Chart every day, at least 15 minutes, 20 minutes a day, whatever time you have in between on your lunch break. You can get the TradingView app for your phone while you're sitting on the toilet, while you're on the bus. Don't do it when you're driving. But literally, just spend 15, 20 minutes a day, look at the chart, see if you could start finding patterns. Do some YouTubing or Googling on chart patterns. There are 2 books that I really love. They're like the Bibles of technical analysis. You don't need books, but if you are the type of book learner, there's one called Technical Analysis of the Financial Markets, and the author is John J. Murphy. Amazing book. The other one is called Encyclopedia of Chart Patterns by Bulkowski. So if you're a book learner and you want to reference books, get those books. Otherwise, you can just Google chart patterns in Google, and you could pull up something like this. Now, why do we draw patterns? Again, all we're trying to do is find support and resistance. So if I look at a chart like laser, for instance, because I've been doing this for a long time, I can easily see what's going on here. This right here is called a bullish pennant. You have a flagpole and you have a pennant, right? It's exactly a pennant. It's named after that. So you have a bullish pennant here, and all you're trying to do, if someone was like, hey, you got to check out laser, or some YouTuber that you really love watching says, hey, you got to check out laser. Well, you might just go in and buy it, but you have no freaking idea. Are you buying it here? Are you buying it here? Do you have any reference for what that price that you're buying at represents? No, you don't. But if you can draw this, then you could say to yourself, this is support and resistance, but it's in the form of a pennant. This is resistance. This is support. This is a trend. What can you do here? You can just sit back and wait your ass out. Wait it out. You don't have to do anything here. Why? Well, because if laser breaks the bullish pennant, which usually breaks to the upside, and you wouldn't know this unless you studied patterns, but it usually breaks to the upside. If it didn't do that and we fail and it breaks to the downside, well, then you don't have to enter. You saved yourself a bunch of money. And then you can look at, for instance, applying what we just learned, you can look at the 50-day moving average, and you could say to yourself, if laser falls, I wonder if it'll find some support here. If it does, I might put an entry here. If it does break out to the upside like you expected, well, you could just buy the breakout and then catch it on the way up. Look at my last post with BNGO, the penny stock. That's what we did. It broke out of the bull flag and we re-entered, and over the last 2 days made 50 or 60%. So all that is to say, again, I'm trying to make this a short video. You're not going to learn about patterns all in one video. Start Googling different patterns. Start looking at pattern sites like this. As a matter of fact, this looks like a good article. I will link it in the description. These are most of the patterns that you are going to need. But just take my word for it. You don't have to know all of these to start making better decisions, more informed decisions based on charts. Just pull up a chart, look at it, try to see what you can surmise from it. Don't get intimidated. Am I buying at the high? Is this a low? Is this near a moving average? People are so scared to miss an opportunity in the markets. Just know that the markets are always open. There will always be an opportunity. Relax. You're not going to miss the boat. You can make informed decisions. You don't have to buy something every day. You can wait, analyze, react. That's it. It's not that hard, people. And for the love of God, don't try to be Picasso. And one last thing I'll leave you with, when the economy opens back up and you're at a coffee shop or you're on a plane or you're at the airport or you're on the subway and you have your laptop open and you're looking at a chart, it never fails. I always get comments from looky-loos. It looks crazy to the normal person who doesn't trade. So they look at you like you are some sort of bot. So be ready for all the questions in the world. Hey, it might even be a good icebreaker if you're looking for some love in your life. But just be ready for the incessant questions. Anyway, I hope you got something out of this. If it was valuable, leave it a big fat thumbs up. If you have any questions, leave it in the comment section below. I try to answer every single question. I do have a course coming out on options, so if you want to check that out, it is the pinned comment in the description, the first pinned comment, sorry. Sign up to our trading group. Link is in the description. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.